And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alix Steel, here to help take you through the closing bell. It's a global simulcast. It starts now with Scarlet Fu joining us in the television studio. Carol Massar and Tim Stenovec coming into us from the radio booth as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube.
Yeah.
A major sell-off going on across all of the major equities, including a 7% drop in the stocks.
Yeah, I love that you went there. First of all, we are seeing some buying here at the close, so we're just rounding off our worst levels of the session, but still down across the board. But yeah, kind of blows my mind, right? Romaine, we're up, 7% on the stocks yesterday. Well, they gave it all back today, down 7%, as you just said.
Intel, one of the companies, down 5% in the stocks. That company expected to report results in just a few minutes, along with Amazon and, of course, Apple coming at 4:30. We're going to have those numbers for you as soon as they cross.
What's interesting here is volume. Volume is really elevated compared to the 20-day average. For the S&P 500, about 30% above the 20-day average. For the NASDAQ 100, which includes two big companies reporting, it's 40% above the 20-day average.
And here's also the question, too. I understand, as we're going into earnings, there's a fundamental, like the bad news is bad news. But also in general, there's still a lot of equity longs within the systemic funds, volatility-driven funds, CTAs. And is this just a continuation of that selling that was really triggered over the last couple weeks?
Yeah, and then you're also up against the whole seasonality issues as well here. So that's obviously feeding into the price action as well. A significant drop in Treasury yields today with that 10-year yield looking like it is going to close out the day below 4%. A drop in commodities, elevation in the VIX at 1 point trading above 19. As we get the closing bells here in New York, as we wait some big earnings, let's walk you through the numbers here. Dow Jones Industrial Average looks like it's going to finish the day down by more than 500 points or about 1.3%. Of course, it takes a few seconds for these numbers to settle, but you get the gist. 76 points lower on the S&P 500, a 1.4% decline. Meanwhile, the NASDAQ Composite down about 2.3% here on the day. NASDAQ 100 down about 2.4%. But let's take a look at the small and mid caps. Dow Transports down 1.7%. Mid caps down 2.1%. And the Russell 2000, Carol, closing out the day with a 3% loss.
All right, back to the big caps we go, though. And most names in the index lower, guys. 330 to the downside, 173 to the upside, Scarlet.
Yeah, but you look at the sector breakdown, and most of the declines, as expected, are in infotech. That group is off by 3 1/3%. And what you want to pay attention to is the bright red slice of that pie. That is semiconductors, and they're off about 7% at the moment. Energy and consumer discretionary each losing more than 2%. The groups that are bucking the decline, utility, REITs, and consumer staples, so a little bit of that defensive buying.
All right, quick check on some of the individual gainers. Meta, guys, finishing the day with a 5% gain. You know this story, rallying big time. One of the top gainers in the NASDAQ 100. Amazon, though, guys. Let's go right to it. It is out.
All right, let's take a look at the EPS, $1.26. The consensus estimate was $1.04. In terms of net sales, that does meet analyst estimates overall, $147.98 billion. Analysts were looking for $148.78 billion. Let's take a look at Amazon Web Services. The net sales there, $26.28 billion. Higher than what analysts had anticipated. This is the driving force of Amazon's profits, certainly the cloud business. North American net sales, because the retail business is certainly picking up steam of late as Amazon drives its efficiencies, $90.03 billion. Analysts were looking for $89.98 billion. When it comes to the outlook, Amazon says net sales in the third quarter, this quarter, will be anywhere from $154 to $158.5 billion. Analysts were looking for $158.4 billion. Then third quarter operating income will be $11.5 billion to $15 billion. Big range. Analysts were looking for $15.66 billion.
Okay, I'm looking at Intel right now. The company shares are just cratering in the after hours. Sees third quarter revenue $12.5 billion to $13.5 billion, a huge miss. Estimates were for $14.38 billion. Shares down 9% in the after hours. Intel second quarter adjusted gross margin coming in at 38.7%, also a miss. Estimates were for 43.6%. Sees third quarter adjusted gross margin at 38%. Estimates were for 45.5%. Shares down 10% in the after hours.
Yeah, and the company announcing that $10 billion cost reduction plan to increase efficiency and market competitiveness, implementing a more than 15% headcount reduction, suspending that dividend starting in the fourth quarter of 2024. In 2025, next year, company targeting gross capital expenditures between $20 billion and $23, and net capital spend between $12 and $14 billion.
So that's going to be a little bit whittled away here. I mean, that's what really jumped out at me. You suspend that dividend. You're obviously reducing headcount. This now becomes becomes a cost story. And this was sort of the concern with a lot of these companies about the spend that they were having to do to sort of keep pace with whatever new era we're going into. Some companies will be forgiven for that, but obviously for Intel, at least based on the initial share reaction, not quite so forgiving.
Yeah, let's go back to Amazon, guys, for a second, because that third quarter forecast is what is raising some eyebrows here. Net sales estimates on the high end, about $58.5 billion, and as Scarlett pointed out, is quite a range. That is just in line with what they were expecting before. Operating income, though, to be about $15 billion on the high end. That misses estimates that seems to be very much weighing on shares for the quarter, despite the fact that their physical online stores and AWS growth, et cetera, delivered very much so in the second quarter.
So the big question for Amazon clearly is what they say about how much AI contributes to Amazon Web Services. And each company has kind of done this in their own way. Microsoft talking about the contribution, the points contribution to Azure sales, for instance, but not really itemizing exactly how much it is. So that's going to drive the narrative for Amazon going forward.
Yeah, Andy Jassy flicking at that, Scarlett, in the press release, saying that as companies continue to modernize their infrastructure and move to the cloud, while also leveraging new Gen AI opportunities, AWS continues to be customers' top choice. We have much broader functionality, superior security and operational performance, a larger partner ecosystem, and AI capabilities like SageMaker, Bedrock, Trainium, and more.
But again, some disappointment, no doubt about it. Just to rehash, guys, you've got Amazon down 5% here in the aftermarket. The big headlines, second quarter AWS net sales, that is 26.28. That's a beat, but the outlook, the third quarter operating income, 11.5 to 15 billion, and the street estimate is above that, $15.66 billion.
We got MicroStrategy a little while ago here. Let's get right to it. Of course, the software company that's effectively been operating as a digital hedge fund. Its digital assets in the most recent quarter continued to grow, $5.7 billion right now on the balance sheet. What did that translate into on the top and bottom line? Well, a loss of $5.74 a share, greater than what it was a year ago at $1.52, and revenue also coming a little bit light at $111 million. All
right, just a quick check-in here on DoorDash. Looking at its gross order value for Marketplace, coming in up 20% year on year, coming in at 19.7 billion. That is better than estimated. Revenue also coming in stronger than estimated. Gross margin bang in line with estimates. Orders also increasing, and if you take a look at their third quarter, they're also seeing on the high end about $540 million in adjusted EBITDA. So pretty solid quarter there for DoorDash.
Let's just go back to Intel, because in looking at the different stocks that are moving in after-hours trade, the one that really stands out is Intel because of that drop, a sizable 11% plunge. We knew this company was in turnaround mode, and we knew that the company was going to cut a lot of jobs to reduce costs and everything, but suspending the dividend kind of puts it in a different category, because for a while people were looking at Intel as an income-generating company, an income-generating stock. But this revenue outlook miss really raises a lot of questions about how much progress it's making in improving. It's trying to get back to what it was to its heyday.
On that, it says Intel, of course, taking the added steps of suspending the dividend, starting in the fourth quarter, recognizing the importance of prioritizing liquidity to support the investments needed to execute its strategy. The company reiterates long-term commitment to competitive dividend as cash flows improve to sustainably higher levels. I think that's kind of an interesting nuance to what they're doing.
Okay, well, let's not forget, they cut the dividend last year in half, I think. So, and now they're basically suspending it altogether here. I'm not sure what kind of message that sends, particularly for a company this mature.
The actions for this cost reduction plan include structural and operating realignment across the company, headcount reductions, operating expense and CapEx reductions of more than $10 billion in 2025 compared to previous estimates. Intel is looking to achieve a clear line of sight toward a sustainable business model with the ongoing financial resources and liquidity needed to support the company's long-term strategy, reducing OpEx, reducing CapEx, reducing cost of sales, maintaining core investments, and executing strategy.
What does it say about a tech company when they start using words like liquidity and debt balance in their earnings statement?
Exactly. It's called all hands on board, right? Rein in all the costs, because we've got to kind of conserve or preserve whatever cash we have for what we really need to do.
Yeah, for me, the headline that really says it all is they say that second half is is now looking weaker and there's inventory buildup, I mean, this is a straight up, very cyclical business. And as long as the inventory doesn't clear, it's going to be very hard to find that recovery.
All right, guys, we've got Amazon down about 1.6% in the aftermarket, and you've got Intel, really the big decliner here right now in the post-market trade, down more than 11%. All right, that's a wrap on our cross-platform coverage. Radio, TV, YouTube, Bloomberg Originals. We know, Alex, you're heading out. Scarlet and Romaine continuing on television. Of course, Tim and I are going to continue on Bloomberg Business Week. Guys, we will see you again, same time, same place tomorrow.